All right, so thanks for coming, everyone. You probably all have an idea of what this is going to be about. Um, I won't say too much. I'll hand over to Sam shortly, but I think I will say off the bat, Sam is definitely not like your average accountant, and I have been with average accountants, believe me. And the idea of his service is that it takes it to the next level, and he's not just a box ticker. He's not just doing the bare minimum. He is actually looking out for your business proactively and trying to keep more money in your pocket at the end of the day. So I'll hand over to Sam now. Go for it.
Hello, everybody. Um, Thanks for having me, and thanks all for showing up 7 o'clock on a Tuesday evening. I had to look at my phone then because I forget which day it is sometimes. So, like I said to Jimmy before this call began, I've kind of been keeping my eyes on the community and what people have been saying and asking questions to Jimmy and the team regarding what would help people in the community. So I've put something together, a little presentation, and effectively it's to introduce me, myself, and there's just a couple of random topics, if I'm honest, that I think are relevant. What we're going to do is go through each section, and at the end of each section, if anyone's got any questions they want to ask, then they can fire away, and we can do the Q&A throughout at the end of each section while it's fresh of mind. And during this call too, if anything comes to mind that you'd like me to provide more content on, more information, or something you're unsure of, then write it down. You can ask during the presentation, or if it's something that's completely off topic and you want to message me privately or message in the accounting chat, then we can do it after. So I'm just gonna share my screen, and we'll get going with this presentation.
Yeah, do make sure to ask as many questions as you can, guys, because you've got an hour here to pick Sam's brain, and it's a great opportunity.
Yeah, for sure. And the more questions you ask, the more of an understanding I get of what it is that you guys need. So the more I can help.
No worries, Paul. That sort of time.
Okay. I believe we're up and running. Look good your end, Jimmy? Perfect. So first slide is all about me. Who am I? So my name's Sam Taylor. I'm a 27-year-old entrepreneur who began in the world of accountancy when I was 18. So I worked at quite a large regional firm for around 6 years before embarking on my own journey. During my own journey, I took a real interest in e-com clients and just the e-commerce space in general. And at the time, one of my clients was doing really well on Amazon, and I was really interested. And we went for a coffee one day, and I said, "Look, I love this. I love what you're doing. I'm really interested in the ecom world, and you selling on Amazon. How can we work together?" And after a couple of weeks, we'd set up a new business where we were gonna go on this joint venture together and sell on Amazon. So we set up this business, and within, I think it was within 6 months, we were doing really well, and it became more of a not full-time commitment because I had the accountancy going on, but more of a commitment than I initially thought it would. And this year, we're on track to do over 7 figures. And I don't say that to brag. I say that because it's important for you to know that I've also sold on Amazon and I'm selling on Amazon, and I understand the struggles regarding the financials, and what actually matters. So yeah, that's a real brief intro about me. If you want to learn more about me, feel free to ask any questions. We can jump on a call, but ultimately, I've got years in the accounting industry. I understand Amazon, and that's why I think I can help you guys. So, what are we going to talk about tonight? These are the points that I've come up with, which I think are relevant. The first one on the agenda is more than compliance, and it's just effectively me speaking about the problem with outdated traditional accountants and effectively what a good accountant should do for you and what you should look for when you're looking for an accountant. That pricing and profitability, this is in relation to a couple of people in the group, I believe, are close to that threshold. So I thought we'd really quickly touch on VAT, just get a bit of an understanding about VAT and how it affects pricing and how it affects profitability. Key metrics. These are metrics that like you've got to be measuring, because if you're not measuring, you're not improving. So those are the key metrics that we'll go through. Growth and cash flow, which they both sound like great words and everyone loves that sort of stuff. And I think it's really relevant to go after key metrics, because without them, you can't grow and you can't improve your cash flow. And then we'll do a live Q&A. But like I said, at the end of each section, I will open the floor to questions, just while the topic's top of mind. And if there's any questions at the end, then we'll do the live Q&A. So, more than compliance. Now, the reason I've put an abacus and a dinosaur on this slide is because that's my view of a traditional accountant. They're old, they're outdated. There's no modern technology used, and all they're doing is ticking boxes, and it's not really helping you. It's a service you're paying for, and it's all you're getting is compliance. There's no strategy. There's no thought behind the numbers. It's just compliance. So that's why those pictures are on the screen. So the problem with a lot of accountants, and this isn't every accountant, there's great accountants out there, but the problem with old and outdated accountants is you've got no financial visibility, which means you've got no understanding of your key metrics. You don't know if you're making money, you don't know if you're losing money, you don't know what SKU's making money or losing money. And ultimately, without financial visibility, like you can't make good business decisions. The second one I've wrote is about having an e-commerce understanding. Now, most accountants, a generic accountant would do, I don't know, for example, a scaffolder, a hairdresser, and have all these different industries. And without that specific e-commerce knowledge, you miss out on certain opportunities when it comes to improving your business, saving more tax, making more money, just because they haven't been there and they haven't done it. Reactive, not proactive. Again, it comes back to the compliance, the box ticking exercise. So many accountants out there are just asking for your records at the end of the year. They're doing the accounts, they're sending them back to you. You don't really understand them. You sign them, you have tax to pay. You don't really understand what's going on. And the problem with being reactive and not proactive is you're not making decisions that are going to benefit you for when it does come the year end. For example, just a really quick example. If you were a highly profitable business with loads of cash in the bank and you waited till the year end, you gave your books in, you're going to pay a lot of tax. Whereas if you had a proactive accountant that's on top of your figures and financials, then effectively they could advise, for example, they could advise to invest into a pension, which is, it's going to reduce your corporation tax. It's tax-free for you personally. There's so many different things that we can go into. But that's why proactive is so important as opposed to reactive. No tax strategy. So with every one of our clients, the initial call is all about vision. And the reason we talk about vision and where the business is heading is because we can help implement a tax strategy that's going to help you get there. And like I say, a lot of accountants, there's no tax strategy. It's hand your books in, get to the year end, do your accounts, and they tick you off and they move on to the next. The final point on this slide is poor communication. A lot of accountants, I feel, find it hard to communicate things in a simple way for people to understand. Like, in my opinion, you've got to be a translator. You've got to be that translator between the financials and your client, and you've got to communicate in a way that's going to help them understand the figures. And with a lot of accountants, it's just not the case. So people pick up the phone to ask questions, they'll email to ask questions, and they come away feeling more confused than they did when they asked the question before they asked the question. So this is, in my view, the problem with a lot of accountants out there. What great accountants do. And to be fair, I went into a bit more depth than I thought I was going to on that one. So some of the things we're going to retouch upon here. But again, it's almost the opposite of the previous slide. Like, what you want is an accountant that's proactive, that's giving you a tax strategy, that's going to make sure that your money is working for you. Like, ultimately, you don't want to get to a year end and most of your money go on tax, and you're sat there and you're thinking, where's all this money gone? You want a strategy in place to make sure that you're maximizing everything you're doing. Financial clarity, again, understanding the figures, knowing how much money you've made each month, understanding the profit margin on specific SKUs, understanding your gross profit percentage, your net profit percentage. Without having financial clarity, you don't actually know if you're doing better or worse. And that can be really demoralizing in business, especially when you feel like you've done well, but you don't really know. So yeah, financial clarity. E-commerce
Add as
knowledge.
well, sorry.
Yeah, go for it.
With our Amazon businesses, we're quite used to seeing all our numbers in a nice, pretty dashboard like STK
Yeah,
or Seller Board. But like Sam's saying, the reality is when it comes off Seller Board, when it's past Amazon, there's a lot still happening there that we need to know about. And those numbers on STK don't necessarily translate into what you're left with and how your business is.
yeah. No, that really valuable point. Like, the dashboard looks amazing, doesn't it? Especially when your sales are increasing and you've got all this money sat in your Amazon account and it looks great. But the truth is you could be losing money. And just because your sales are increasing, it doesn't mean you're profitable. Um, so yeah, no, really good point there, Jimmy. Specific e-commerce knowledge, I won't go into that. I think I did enough on the previous slide. Like, it's really important for your accountant to understand ecom, because it's just a different beast to every other industry. And the last one is cash flow forecasting. Within an Amazon business, especially a retail business with where you have stock, like, cash flow forecasting is so important. So yeah, effectively, we've reached the end of, like, what the past looks like in terms of old traditional accountants and the things that good accountants do. Is there any questions, anything anybody wants to add or anything like that just before we move on to VAT? Feel free to unmute your mic and ask me verbally, or you can write in the chat, whatever's good for you.
I just have a comment. I mentioned I had just found a new accountant, and they were specialists in e-commerce
Yeah,
apparently. As I got talking to them, though, it seems most of their customers are buying a container from China twice a year.
yeah,
They're more concerned about paperwork back and forth. They're telling me, we want you to do a collective invoice as much as possible. Buying a lot of product at once, and it should be relatively profitable, because if we're getting a lot of invoices for 20 cents, profit, it makes no sense, and then we're going to have to charge them more. So that was something I noticed about e-commerce knowledge. Um, Sometimes it's advertised and it's not as clear if they, I mean, I think they know e-commerce in general, but I'm not sure if they understand the aspects of retail
Yeah.
online arbitrage.
Yeah, no, that's a really good point. And ultimately, any accountancy firm could, set up tomorrow and say that they're e-commerce specialists just to target that specific niche and market towards that niche. So you're right to bring that up. And the only thing I can say on that is to just do your research. I think like a recommendation is always great when it comes to an accountant, especially if it's within a specialist market like e-com. But yeah. Is there any other points anyone else wants to add or any other questions?
Really basic as well, guys. It doesn't have to be diving straight into like tax strategy and stuff because that's probably
Yeah.
new to a lot of you. So even basic questions, guys.
I've got one, but it's more of a kind of general thing. I could probably just wait to the end if
Okay.
that's easier.
Yeah, well, throw it out now.
Yeah.
And then
So
if it's an end thing, we'll park it.
yeah. So at the moment, kind of where I am, also try to keep the overheads and whatnot down to a minimum. So I have been trying to do as much of it myself as possible. So I've got the profit and loss account and whatnot. And what I've been doing up to now is basically taking the data from like the summary and transaction reports in terms of the revenue and then your cost of sales and taking that in. What I've noticed is when I'm looking at my seller fee invoices from the tax report section,
Yeah.
they weren't reconciling with the transaction report.
Yeah.
Now, when I've looked into it, it's apparently to do with some of the seller fees that are shown in the transaction report aren't taxable. So you'll never be able to reconcile properly. And also the reporting ranges are different, even though you're filtering by the right period, like for a month, it's the same period, but the transaction report will pull data from a different place than the seller fee invoices. So I suppose my question is, and I'm hoping I know the answer, right? Between the two, what should I be using if I'm doing my profit and loss account? Should I be showing the cost from my invoices? Because to me, that's what an accountant would be looking at, going, right, where's your invoices? But I think you should be taking it from the transaction report because that's your genuine cost of sale against the revenue in the month.
Yeah. It's a really good question. And just a quick question for you. Are you VAT registered yet or not?
No.
Okay. Yeah, so you're right to take it from the transaction report, the repository report for the month.
Okay. Just while I'm non-VAT reg.
Yeah, so effectively, one of the main things about an invoice that has relevance is VAT. And before going VAT registered, HMRC aren't as anal. Like ultimately, if you were to show them the repository report, that's good enough. At the point you go VAT registered, it becomes a lot harder to do the accounting yourself without introducing a software like Link My Books or A2X. But the monthly repository report you're talking about is fine, and that's sufficient for now.
Yeah, I mean, I think obviously, the quicker I can be generating the revenue and profit to justify, like say yourself or something, and getting the A2X link and all the rest, because I've got a very, very basic zero set up.
Yeah.
Which is reconciling the bank and all the rest, but there's a lot of manual admin that goes into what I'm doing month to month just now, and I think as the sales go up the way, it's going to become less manageable. But I'm hoping by then I'll be able to shift over to something a bit more automated. But it's just for now, just to know that what I'm doing is actually correct. So thanks for that.
Yeah, no problem. And if you drop me a message after this call, I'll jump on a call with you and just talk it through you in more depth, because we could talk about it for a long time. So I think I could probably add value to what you're doing. So if you drop me a message, we can arrange that.
I appreciate that, mate. I will do. Cheers.
Cool. Right. Just the next section now. We're not going to spend loads of time on it, but I think it is relevant, and it is relevant for a few people potentially who have joined this, and it's in regards to VAT. Now, just to touch on a couple of things, the VAT threshold at the moment is 90k in turnover over a rolling 12 monthly period. So effectively what that means is if you were to look back 12 months today, how much have you turned over from today going back 12 months? Once that figure reaches 90k or more, you have to register for VAT. So really simple. I appreciate that a lot of people understand what that is, but I want to talk about the basics because I think it's important. So what is VAT? It's value added tax, and effectively when you're selling on Amazon, when you go VAT registered, some of your margin is going to be eaten up by VAT. For example, if you're selling a product at £30 and then you go VAT registered, that product really is only then selling for £25 plus VAT, if that makes sense. So VAT is a value added tax. It's 20% in the UK at least, and it'll be 20% of your sales figure, and then depending on where you're buying your stock, if it's from the UK, there's going to be purchase VAT. If you're wholesaling and bringing stuff in from China, then there probably won't be VAT, but there might be import, but I don't want to get into that. I just want to keep it nice and basic. So effectively, it's your sales VAT minus your purchase VAT, and that's typically what you're going to pay or reclaim from HMRC. Think about it like the scale that I've got on the screen. If your sales VAT is more than your purchase VAT, then you're going to pay something over to the government. And again, VAT, it's really simple, but also very complex. So when we get to the end of this section, if there's any questions on VAT, please let me know, because I appreciate we're going through it quite quickly. So I just want to talk through pre-VAT registration and post-VAT registration and how it affects selling on Amazon in regards to gross profit effectively. So next slide. So this is just an example that it's completely made up. So this is pre-VAT registration. So if you're selling an Amazon item on Amazon for £60 and your commission plus FBA fees plus the digital service fee, whatever it is totals £18, and the cost to buy the product is £24, your gross profit is 18. Does everybody understand that? Like, from like a really simple perspective, like you sell it for 60, your costs are 18 and 24. Effectively, you're making a gross profit on that SKU of 18 quid. Like, really simple. By the way, if you don't understand, please I'm happy for you to just pipe up, just unmute, just cut me off and say I'm not understanding. Like Jimmy said in the chat, no question's a stupid question. So this is pre-VAT registration. Once you go VAT registered, effectively you can reclaim the VAT on your purchases, but you have to charge VAT on your sale. And typically with a retail product that's selling for £60, you're not going to then add 20% on and charge it to the consumer, because you effectively are never going to be the buy box, or you're not going to sell that product because it's too expensive. So you're the one that has to suffer the cost of that effectively. So this is after you go VAT registered. So effectively, the sale of your product is now £50 plus VAT. So even though someone's paying £60 for it, your net sale is £50. The Amazon fees are £15 plus VAT. The product cost is £20 plus VAT, but you don't reflect VAT on a profit and loss, which is important to note. So as you can see, after the VAT registration, the gross profit from before moves from if you just look at the figures here, you can see that the gross profit has changed because of VAT. So the gross profit before was £18 and the gross profit after registration is £15. Something to note is typically the gross profit difference usually sits around 16%, and it will sit around 16% for most examples, to be honest. So effectively what this means is if you are going VAT registered, you need to just be aware that your gross profits are going to decrease, and it needs to be factored into calculations to make sure that the SKU that you're looking at is still worth buying. As you're coming up to that 90k mark as well, it's also worth looking through all your SKUs to make sure that they're actually going to be profitable after you go VAT registered. There's a lot of sellers that make loads of money pre-VAT registration, and because they're not aware of this, they go VAT registered and all of a sudden they're breaking even or not making any money or losing money. So it's really important to build this into your calculations and margins when you're looking at sourcing a product, for example. So I know that was a quick section. So I'm just going to open the floor now to any questions that anybody has, or if anyone wants to add anything.
Hi, Sam.
Hi, Paul.
On the gross difference, on the gross profit difference, obviously, it doesn't look as sexy once you're VAT registered. But are there any circumstances where it would be advantageous to become VAT registered before you even hit the threshold?
Yeah, it's a really good question. For example, if you're selling children's clothes which are exempt from VAT, then yeah, it would be advantageous to become VAT registered, because you could reclaim VAT, but you wouldn't have to charge any VAT on any of your sales. So I appreciate that's very niche. So other than that and any other non-vatable items, not really.
Okay. All right, cool. Thank you.
And is there anything else on that, Paul?
No, I don't think so.
Okay, perfect. Does anybody else have a question? I just want to quickly add, sorry, in relation to Paul's question there. I answered that from a Amazon e-commerce perspective, because that's what this group's all about, right? There are circumstances outside of e-commerce where it would be more advantageous. But again, I don't want to go down that rabbit hole because I don't think it would serve this community right now. But if you want to learn more about that, feel free to message me and ask me after the call.
Sam,
Just add as
again,
well.
without going down the rabbit hole.
Yeah.
Without going down the rabbit hole, just very briefly, are you talking? So this would be sales outside of Amazon, say from your own website, for instance, or something like that?
Good question. No, sorry, I'm specifically referring to the industry. So e-commerce as a whole, selling online, retail,
Okay.
It wouldn't be.
Right.
I was talking more about different industries where you don't have to buy a product, for example, and your costs are really low. But yeah, in regards to if you're selling a product, unless it's VAT exempt, then no, there's no advantage.
Okay. Would that include drop shipping?
Yeah, it's the same thing. It's the same thing.
Fine. Okay, cool. Just checking.
Yeah, for
All
sure.
right, lovely. Thank you.
No worries, Paul.
I'll just add as well, you can see this profit difference if you're using Seller. I'm not sure what the other softwares are like, so don't use them. But you can slide this toggle in the settings, so you can see in real time the difference it's going to make on your products. And I would recommend, if you know you're coming up to the point of VAT reg, check your replens, change the toggle, see what happens, because that stock could be absolutely useless to you come next month. So just be aware of that as well.
Yeah, 100%. It's something that people get caught out with, so it's good to just know about it in advance. And ultimately, if you work VAT into your profit margins now, you're going to be even more profitable before VAT registration too. And when you do go VAT registered, it's not going to affect you at all. Any more questions before we move on?
Add another tip then.
Yeah.
When I knew I was going VAT registered in a few months, I think it was about 3 months before I moved to VAT reg. I changed the settings on SaaS like I was talking about, so I put them to the VAT reg figures, and I just stopped looking at non-VAT reg profit for that 3 months. And it might seem like a big hurdle at first because you're taking that hit on the profit, but honestly, within that 3 months, you just get used to it and you start finding the opportunities and you forget about all of those lower profit items. So I'd recommend switching a few months prior to VAT reg.
Perfect. And you've just jogged a thought that I think is quite relevant in this in regards to registering for VAT. If you're one of the people that's close to going VAT registered, even if you're not, but more so for the people that are close to going VAT registered, you can do what's called a backdated VAT return. So effectively, on the date you go registered, any stock that you hold, you can backdate and reclaim all the VAT on that stock. And then you'll only pay the sales VAT going forward. So anything prior, effectively stock that you hold, you can claim the VAT back. For example, one of our clients recently has gone VAT registered, and I believe they had a 8.5K refund through VAT from a backdated VAT reclaim. So make sure you just keep all your invoices, and at the time it comes, like a good accountant will say, we can do this, let's have a look into it. So that's something I wanted to add, something to be aware of.
Yeah, that can really make or break as well your first VAT return or possibly payment to VAT.
For sure. Okay, moving on then. Let's talk about key metrics. And when I say key metrics, of course, they're accounting related. The metrics on the next page, we'll go through each one, and I'll just tell you about why it's important to even have metrics and know what your metrics are. So really simple. You've probably heard most all of these. We'll just start with revenue. Now, everyone online brags about how much revenue they did. Ultimately, revenue isn't the be all and end all, in my opinion. The bottom line is what matters, the profit is what matters. However, if you're working backwards and you know that each product that you sell has 40% margin, let's just say, and you work backwards from there, you know that if you scale your revenue and you have made sure that all these SKUs that you're accumulating and selling have 40% margin, you know that more revenue equals more gross profit. So it's not like a bad metric. It's a good metric, but again, there's no point turning over 10 million if your costs are 10 million, like you're making no money. So always work backwards is my approach. Revenue it's a good figure to track, but don't get too caught up in revenue. Like focus on the bottom line, focus on improving the profit, increasing your margins. And as long as you do that, increased revenue will ultimately increase your profit. Gross profit percentage. So effectively, your gross profit percentage is a percent. So say, for example, your revenue in 1 month is, let's say it's 5K. And during that month, you spend 2.5K on stock, and within, okay, I need to simplify this. So your gross profit is sales minus cost of goods is your gross profit, and then your gross profit is of percentage is a percentage version of your gross profit figure effectively. So to work out your gross profit percentage, the top figure is your revenue, your turnover, which again is 5k. And then you've got your cost of goods sold section, which includes your opening and closing stock balances, and it also includes your cost of sales. So what costs have you got in relation to selling your product? So you've got your FBA fees, you've got your commission, you've got your product cost effectively. So if all of that was to come to 2k and your turnover was 5k, then your gross profit would be 2.5k, giving you a 50% gross profit percentage, just to keep it really simple. This is an important figure because this again shows you how profitable you are before your admin expenses and everything that's not to do with the business. Ultimately, if you're making a gross profit, then you can make the business work. The higher the gross profit percentage, the better, of course. So yeah, it's a really good metric to track month on month to make sure that you're sticking to what you said you was going to do and only source high margin products, for example. So yeah, really, really important metric to track. Net profit percentage is your net profit. It's a percentage of your revenue. So it's like gross profit, but your net profit is after all your administrative expenses, such as accounting, such as like your telephone costs, like maybe your broadband, etc. All the things that don't relate directly to the sale of a product. So again, it's a really good metric to track, and it's a good one to try and improve. I know I work with a lot of clients that have come to us not really understanding where they're at. So it's important to get to a place where they understand their net profit percentage, and then we can look at things like their admin costs and make sure they're not overspending on things. Believe me, there's companies that spend money on things they don't even know they have. So it's crazy. So make sure you're keeping a track of your net profit percentage. EBITDA is earnings before interest, tax, depreciation, and amortization. A lot of big confusing words. So just to simplify that, it's almost net profit, but you just don't include interest, tax, depreciation, and amortization. So again, that's a really important figure to track. If you was to sell a business, for example, typically people would buy your business for a multiple of EBITDA. So yeah, that's bottom line. It's a really important figure. That's effectively what matters month on month. And then I've also put opening and closing stock at the bottom with a question mark. And I know I've roughly touched on it within the gross profit metric, but opening and closing stock within your profit and loss account is so important. Like, I can't stress this enough. If you're just recording like how much you've sold, how much you've bought, like you have not got a true reflection of what you're actually making, because ultimately let's say in a month bought 5k worth of stock that you haven't yet sold, it would look like you've made no money. You've sold 5k, but you've also bought 5k. It would look like you've made no money, which is why closing stock and opening stock are really important figures. By inputting that closing stock figure into the profit and loss, the 5k, it would then show that you've made 5k. Obviously, that's not the best example in the world because you're going to have some costs, but opening and closing stock are really important. So if people want to understand how that works, like, please let me know. For everybody who isn't VAT registered, I've got a little Excel sheet. I know that some people are using softwares, so I can create something or talk through how to include it on Xero, etc. But I've created something that effectively pulls through all your figures into a profit and loss, pulls through your opening and closing stock for you, so you haven't got to worry too much. You just input the data, which is really simple, and then it will calculate it all for you. So key metrics, appreciate that one was probably a little bit confusing. So happy to take questions on these now, and then we can move on.
Sam, you'll provide a copy of that sheet at the end, will you?
Yeah, if you want the Excel document, I can send it over to you. Just drop a message in the accounting chat, and I'll send it to you.
Yeah, cool. Thank you.
No problem. Any questions before we move on? Jimmy, anything you want to add?
Just question for the audience. Is anyone currently recording their opening and closing stock?
Not at the moment, no.
No, my
Few
account's
head
really
shakes.
less. So
All right, well, it's good to know.
No, I think that's good. At least I've added one bit of value. And again, like I can go into it in more depth. So the fact you're not doing it, like I'm glad in a sense, because I can help. And like I say, without it, like you just can't have clarity on how much money you're making. It's impossible. Right, we all ready to move on? Okay. So growth and cash flow. Everyone wants to grow. Everyone wants all the money in their bank now. So I think they're important things to talk about. I appreciate we've gone through quite a lot already. So if you're unsure or you want to re-go through it again, please drop me a message, ask me questions. Like that's what I'm here for. So here is how accounting fuels growth. And just on this, a lot of people view an accountant as a cost, and they think, oh, I need to pay somebody to do that just so I'm compliant with HMRC or whoever the governing body is where you are. But the truth is accounting can really fuel growth. And we're going to go through it on the next slide. A good accountant should fuel growth, and you should get a return on your investment with your accountant. That's one thing I didn't say at the start. ROAS accounting, return on ad spend, but also return on accountant spend, hopefully. So, really simply, accurate data is the be all and end all. Without accurate data, like you really can't make any decision that's going to be beneficial anyway, because you've got no data to back up that decision. It's probably an emotional decision. So the first thing that's really important is accurate data. Now, I'm not going through it on this call, so it's something that we can speak about in the future, but it's that, like, Craig, you've got Zero, which is great. Like, I really recommend everybody having some form of spreadsheet or software to track, so they can actually get a grasp of their data. And again, we can go into that in a lot more depth on how to make sure your data is accurate and what to do and what not to do in a future call. So number one, accurate data, get good data. Number two, profit clarity. I've made some notes somewhere. Yeah, so ultimately, by having accurate data, you have clarity around your profit and how much money you're making. Again, going back to accurate data, if before you, what's that software called? Sorry, Jimmy, that a lot of people are using.
For accounting.
No, not for accounting, for tracking profitability within SKUs.
Generally, Seller Toolkit or Seller Board.
Seller Toolkit or Seller Board, yeah. Yeah, so like those tools are great because it can provide clarity on the individual SKU and how much profit it's making. So yeah, first you need accurate data. You need clarity on how much money you're making and what's making you the money. And from that, you can make decisions and reinvest the money into what's making you money, simply put, or you can reinvest into new SKUs, diversify the portfolio of what you've got going on. And ultimately, it's like really that simple. Like, get data, understand where you're at as a business, then make a decision based on the data to reinvest the funds, hold off, reinvest it on a SKU that's making you a shitload of money. And it's just refining that process and improving it. And ultimately, if you can do that and you can keep doing that, like you're gonna make a lot of money. But it all starts with number one. Like, you need accurate data, and I can't stress it enough. Like, you can't progress as a business without it. It's really, really important. This next slide, scaling will not fix your problems. It's so true. I talked about it a few slides ago when I talked about the core financial metrics, number one being revenue. Everyone boasts about revenue. Everyone thinks revenue is the number one thing. But if you're not making any money, 10x in your revenue is not going to fix the problem. It's not going to fix it. You're still not going to make any money if you're not doing the right thing and focusing on that bottom line. So yeah, this next part is I mean, it's massive. Like, cash is like, it's king, isn't it? It's so important. And the problem that a lot of people have with Amazon businesses is like the payout situation. You've got to wait 2 weeks, they hold your funds, then they send it, and you know, you've got 3 to 5 working days before you receive the money. It's paying for stock, it's making sure that you've got enough money to cover bills, etc. So I can't stress this enough. Cash is really important, and I think you all know that. So why is it important? Well, it helps you reorder stock, pay for your stock. Like, without it, you can't reinvest. I've put ads on there. I know a lot of you don't really use ads, so I won't worry too much about that. But it's just really important to have. It keeps you calm under pressure when you've got money. It allows you to explore opportunities that you wouldn't have been able to if you didn't have the money. And ultimately, it allows you to pay yourself as well, because like, nobody's doing this for free. Everybody's doing this because they want to make money. So let's talk about improving your cash flow. How can you improve it? How can you better it? Again, within each one of these circles, like, we could go really in depth, especially with the stock and the forecasting, I think. But just as an overview, how can you improve your cash flow? How can you put more money in your bank, get more money in your bank? How can you stop worrying that you haven't got enough money to pay your bills, or reinvest, or order new stock? One thing you can do is optimize your stock. And when I say optimize stock, I mean, as an example, order more frequently, less product if price permits. A lot of companies might charge a cheaper rate to order more. Again, then it makes more sense. But if the lower you can keep your stock, the better, because you won't have cash tied up in stock ultimately. Focus on high margin products rather than low margin and volume, because if you do low margin and volume, you're typically going to have more stock. And again, going to the first point, you're just going to have money sat in stock that you're not really making much money from anyway. So my belief is to focus on high margin, fast selling SKUs effectively. So again, that comes into the product research, and that's not what I'm an expert at, but it's something that I'd be aware of when you are doing that. Payment terms, this might not be mega relevant, it might be, If you're doing wholesale, it becomes very relevant. A lot of companies, especially once you've proved that you'll pay, they'll offer you payment terms, and this can really improve and help cash flow, especially with 30, 60-day payment terms. So if you're doing wholesale, or even if you're ordering off somebody you know, and they could offer you payment terms, it's something to explore. Cash buffer. I'm going to come back to track and forecast last. Cash buffer. This is effectively building a buffer of cash within your bank so that if something goes wrong, or you don't get paid out when you need to get paid out, you've always got cash there just in case. It's going to relieve stress, relieve pressure on the business, and help cash flow, rather than you receiving a big amount of money and then you've got to spend it all at once. If you build up a cash buffer, if anything does happen that's unforeseen, you're good to go. And then track and forecast. Like, not many people do it, and you really should. Like, I'd probably recommend at least 3 to 6 months of like forecasting your cash flow, because you'll be able to see dips in where you aren't going to have money and where you're going to need to prioritize things, etc. It's just going to give you more insight of when and when not to reinvest. For example, if you've got £5 in the bank and you think, oh yeah, I've got £5 in the bank, and you reinvest, and then all of a sudden you've got a tax bill, like, it's going to really affect you as a business. So definitely track, forecast what's coming into the business, what's going out of the business, and when. That is one of the best ways to manage your cash flow. And then all of the other things that we've just discussed around it, such as optimizing your stock, looking for high margin product, discussing payment terms, having a cash buffer, those are all things that will help too. I know that was a lot and it was very quick, so please shout me in any questions that you've got.
Samaya has dropped one in the chat. I can take it as I sell on Amazon. Essentially, it's mostly based around like the stock that you're holding. So if you sell a product 30 times in a month, really you shouldn't ever hold much more than that stock. They call it just in time, JIT. You can Google that. There's a lot of information out there on that. It's what Amazon does. And they use a metric called weeks of cover, and they try and stay very strict on that so that their operations aren't overwhelmed with a bunch of stock that's just sitting there and not making money, and so that their pockets aren't draining again on stock that's just sitting there not making money. So essentially, keep your stock lean, buy what you need for now, and then look to replenish just in time, as they call it. Of course, don't go out of stock, but keep it lean, keep it sensible.
Yeah. And there's like a whole hour that we could do on stock and improving stock. Like I said, this is really just an overview, and the good thing about doing it like this is anything that is important to people in the call, or anything people want to learn, that they just have to ask the question. If it prompts a question, great, because then it allows me to help educate people more effectively.
Same goes for after the call as well, guys. Sam's always in the chat if you need him.
Yeah. Right. We're moving on to the Q&A. I know we've asked questions along the way, but now's your chance to throw any question at me, whether it relates to the call or not. To be honest, I'll happily help. If it's a really in-depth question, ask it. And if I feel like it's going to take too long, we'll just book in a call and I'll go through it with you then.
Hi, Sam. I've actually just scheduled a call with you for Friday at 1:30.
Perfect.
So, I've got a few things I'd like to discuss with you. I thought this was really interesting. I'm actually going to run off now because there's a really important football game on now. So, if that's all right, but this is being recorded anyway, so I can still catch the Q&A before we have this call on Friday. But thank you, I really enjoyed it.
For sure. Look forward to speaking to you on Friday. Thanks for joining the call, Paul.
Yeah, that's cool. Okay, thanks, guys.
All the best.
Cheers, Paul.
Okay, thanks, Jimmy.
Yeah. Good time to remind everyone that you can book a call with Sam totally for free to discuss whatever you need. I've just put the link in again.
Any other questions, guys?
Nothing from me, Sam, but I'll get a call booked in with you as well, just based on what we talked about. I've kind of taken a few points just to run through with you, but it's probably more for a one-on-one rather than boring everyone else with my
Fair enough.
with my woes. So
yeah,
cheers.
no, that's great, Craig. Get it booked in, and hopefully I can help.
All do. Thanks.
Cheers, Craig.
I'm the same as well. I'm just so far behind with all that. There's loads I just need to understand, so I'll book a call in with you separately.
Yeah. Was it you that messaged in the chat yesterday, Glenn?
Don't think so.
I think
Okay.
it was Steve who was talking about that
Steve,
registration.
yeah.
Oh, was it?
Don't think he's in here though.
Okay.
Yeah, I'm not at that point. I've just got a year of accounts that are a mess. So
Yeah, get a call booked in, and I'll happily help, Glenn.
yeah, no worries. Thank you.
Perfect. Cheers.
Sam, I do have a question. I know it's not really your area, but yesterday there was a session with Ricky, and he mentioned people in the EU needing to sign up for VAT right away.
Yeah.
when they start out. What's the reason for that? Do you know that?
It depends. It actually depends how you're fulfilling the item. So, as an example, if I was to sell in Germany, but I was to keep my product in the UK and ship directly from the UK, I wouldn't need to register for VAT in Germany. However, if I wanted to go down the pan FBA route and store product in Germany, I would have to VAT register because the product's being shipped directly from Germany. To answer your question, what the question was, why do they need to? Why is that?
I mean, me being based in Germany already and selling, well, right away I'm going to sell. I haven't started yet. I'm going to start soon, and my plan is to start selling within Germany first, and then spread to the EU.
Yeah, so I'm not 100% sure on the German rules and what the VAT threshold is in Germany.
Well, it's 100,000 euros.
Okay.
So basically equivalent to 90,000 pounds, I think. But I was told it makes sense to register for VAT right away. And Ricky was suggesting that that's required yesterday, but I didn't get a reason. I didn't know if maybe you knew.
Yeah. So are you planning on selling in the UK or in just Germany?
Not initially. That's going to be down the line. I'm gonna stay in Europe first and see how that goes.
And in terms of
Ricky meant for cross-border. I think his call
Sorry?
was about cross-border. Yeah, I think he meant
I
for
mean,
when
did you
you're
say
doing
something?
cross-border stuff.
Yeah, okay, that might be. Okay.
yeah, so yeah, I mean I wasn't on the call. However, that sounds right. If it's cross-border, it's something that you have to do, especially if you're storing product in a different company to then sell it there. For you though, Scott, like I wouldn't register for VAT if you don't need to.
Yeah, okay, great, thank you.
No probs. Is there any other questions, guys?
No, just a big thanks. Really good. I mean, for me, it was incredibly helpful just to see the key points to follow on my sales when I start. I mean,
Yeah.
I knew the big ones, but beginning and ending stock, I wouldn't have thought of as a makes a big difference to me. So thank you.
And just because you're selling in Germany, it doesn't mean that you can't use the spreadsheet that I've created either, Scott, because ultimately you're not VAT registered at this point, and all you have to do is change the currency to euros. So again, if you want that, drop a message and I can send it, and unless you're already on the software.
Definitely. Thank you.
No probs. Any more questions, guys?
Feel free to pop them in the chat if you don't want to come on
Yeah,
camera as well.
yeah, or drop them in the chat after the call, because sometimes you listen to a call and you haven't got any questions, and then questions pop into your head, don't they, when you've sat and thought about things. So if that happens later tonight, just drop them in the accounting chat.
Yeah, I think there's a few people catching the recording as well, so you probably get some more questions after.
Yeah, for sure.
If there's no more questions or points to add, then we could probably wrap it up.
Yeah, for sure.
Yeah, it's been fantastic, Sam. Thanks for sharing everything. Thanks for spending the time. You've sold me. I know that. So hopefully a few other people have seen the value as well. I know even I've got some out of this course, so
Oh,
it's
brilliant.
been great.
Yeah, ultimately, as if I can provide value, like I'm happy. But please message me if you've got any questions. Don't sit there wondering. Just ask me. And again, thanks for having me on the call. I've enjoyed it.
Thanks
Brilliant.
very
Make
much,
sure to
Sam.
book
That's
your
been
free
great.
call, guys.
Thanks, guys.
Thanks.
Thanks.
Cheers, everyone.
Cheers
Get that
then.
free
Bye.
call
Bye.
booked.
Cheers, guys.
Good evening.
There you go. Thanks, Sam.